Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Oil dips as dollar against mojo on United States inflation or rate hike rate. Investing.com, it's hard to keep the dollar down and oil rallying when inflation data suggests the Fed isn't doing enough with interest rates. Crude prices dipped on Tuesday, snapping a 3-day rebound from 7-month lows after the last reading on the United States Consumer Price Index or CPI came in above expectation. Prices grew by 8.3% in the year to August, slowing for a second month in a row. The CPI data showed, but economics had only expected an annualized growth of 8.1% last month, and said the pace of free trade was unlikely to be enough to stop the Fed from approving another substantial rate hike in September or flag inflation. The dollar index, which pits itself against six major currencies led by euro, hit an intraday height of 109.49, rising for the first time in 5 sessions, bolstered by the CPI data and the more hawkish interest rates expectation that showed need. A high CPI print raised the odds of a higher for lower rates scenario at the Federal Reserve, economist Adam Button said in a comment post on the Forex Live forum. The Fed's target for inflation is more 2% a year, and it has fueled the raised interest rates as much as necessary to achieve that. The Fed has raised rates by 225 basis points in 4 increases since March, with two back-to-back 75 basis points hike in June and July. Money market traders expect a third 75 basis points increase when the central bank meets on September 21 to decide on rates. New York retired West Texas Intermediate, which serves as United States crude benchmark, settled down 47 cents or 0.5% and at 87.31 per barrel. It had risen its cumulative 7% in 3 prior sessions, rebounding from a near 8-month bottom of 81.20 hit last week. Brent, the London trade global benchmark for oil, settled down 83 cents or 0.9% at 93.17 per barrel. Like WTI, Brent had released almost 7% in the 3 previous sessions after hitting a 7-month bottom of 87.25 last week. The downside in crude prices was bolstered somewhat by an OPEC report on Tuesday that stuck to earlier forecasts by the oil exporters cartel for robust global oil demand growth in 2022 and 2023. Oil demand will increase by 3.1 million barrels per day (BPD) in 20 and 22 and by 2.7 million BPD in 20 and 23, unchanged from last month. The Organization of the Petroleum Exporting Countries, or OPEC, said in a monthly report that indicated major economies were faring better than expected despite headwinds such as surging inflation. Aside from the CPI or rate hikes concerns at the OPEC read on oil demand, crude traders were on the lookout for United States weekly oil inventory data due after market settlement from API or the American Petroleum Institute. The API will release at approximately a snapshot of closing balance on United States crude, gasolines, and distillates for the week end September 9. The number served as a precursor to official inventory data on the same due from the United States Energy Information Administration on Wednesday. For last week, analysts tracked by Investing.com expect to the EAA to report a crude stockpile of 8,300 barrels, extending the 8.44 million barrel rise report during the week to September 2. I think that's all from me. Don't forget to like, comment, share, and subscribe.